Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Happy New Year. The first interview of the new year is with Lynette Zang. She is the Chief Market Analyst for ITM Trading. And if you don't know who ITM Trading are, look them up. They do strategy and education in the precious metals industry. They also buy and sell gold and silver. But what I like about Lynette, she's been there since 2002. Her background is she was a banker, she was a stockbroker, she knows numbers, she understands patterns, she knows what's going on. And I spoke to Lynette a year ago, and we spoke about patterns. We spoke about, I guess, the year of living dangerously in 2022 because of volatility, and she was bang on. So I've asked Lynette to come back and explain to us, help us, I guess, wade through what 2023 is going to be looking like. Lynette, great to see you. You're looking fabulous. Welcome to the Small Caps channel. And
I'm so honored to be your first guest of the year. Thank you so much.
Absolutely. Well, Lynette, I loved chatting to you a year ago. It was interesting then that you said 2022 is going to be the year of volatility. Well, you must have had a crystal ball. So let's start off. What are you seeing in 2023?
Look, I want you to know, first of all, that I hope that I'm wrong, but I'm probably not. Okay. I really do. Because what I see in 2023 is, a lot more volatility, but I also see some kind of major crisis, whether it's going into like a World War III kind of circumstance, some kind of geopolitical event. It's going to be a black swan. So it's going to be something that nobody can see coming. So I can't get very specific, but it could come from many, many areas. And I believe that will happen the first half of the year, sometime in the first half of the year.
Aren't we already in a kind of almost like a World War III? We got Russia, Ukraine, which is starting to spread. Just recently, I saw Brazil. Social unrest seems to be spreading a little bit more.
Yes.
China locking down their citizens, starting to open up. European Union in lots of trouble. And, of course, the Bank of Japan. So are we already in it, this black swan?
We are in the beginning stages of it. I think it will become more obvious and escalate. And, to kind of add to those geopolitical tensions, we've got the political tensions between the U.S. and China. Mm-hmm. We've got all the unrest and the threat. I'm hearing a lot more about the threat of nuclear war.
So am I.
Right?
Yeah.
So, I think, So, yes, we are. We've already begun. There's nothing here that I'm actually specifically waiting for. Yeah. Even though in people's little world, they go, reset, which I've been talking about the reset of the entire system since 2009.
Yeah, I know.
And I was the only one other than Christine Lagarde, which is who I heard it from a million times on an interview. And then I went, oh, crap. Okay, this is where we are. Nobody really was talking about a reset until later. And they even used to tell me, oh, you can't say that because people don't think. That's not my job to tell you what you want to hear. My job is to tell you what I see and what I know based upon historic patterns and what's going on.
Yeah, and patterns are something that you are really focused on as well. I want to get into that in a moment. But before I do, my question to you is, are we, as humans, are we like the frog in the boiling water? We don't realize how bad it's going to get. And because people seem to be very, complacent about what's going on. It's going to be okay. The government will save us. They've saved us before. They'll do it again. What do you think is going to be the thing the straw that breaks the camel's back, where people suddenly wake up and go, oh, crap, I wish I'd listened to Lynette in 2009.
Well, they should be saying that already. But, really, I think the global push to raising interest rates is really breaking the very, very fragile system that we have in place right now. So, I would really say that central banks have intentionally pushed the world to the brink of collapse because of the shift that they have come. I mean, for me, and I really hope I'm wrong about this, but for me, I just keep honing in on the transition of every interest rate in the universe on every single contract in the universe that is due to be finalized by June 30th of this year.
Talk to me about that. What do you mean all the contracts are going to be finalized by June 30th?
Well, every single contract on the planet, if it's a mortgage or it's a car loan or it's a credit card or any of those contracts, they're all contracts.
Yep.
Plus all of the derivatives contracts that are out there, they're tied to, and a derivative is just a big leveraged bet. And it's just for speculation. Well, it's primarily for speculation, right? Primarily. And when the crisis hit in 2007, 2008, shockingly, this LIBOR, which is an interest rate benchmark. So all of those contracts have embedded in them the LIBOR, that interest rate benchmark, and the rates that you pay are based on that. Well, it was discovered and leaked in 2012, leaked to the public, meaning that that rate was being manipulated. Oh my God, really? Oh my goodness. So, because the LIBOR is a stated rate. So you have this small group of bankers that get together in the morning and go, well, gee, if I were going to loan you money overnight, this is how much I would charge you. And if I were going to borrow money from you overnight, this is how much I'd be willing to pay. Yep. So it was a stated rate. Well, once that, and then shockingly, traders, Wall Street used that for their benefit.
Ah.
I mean, can you imagine?
Shock. Not Wall Street.
Not Wall Street.
That bastion of honesty and integrity.
Totally. Goldman Sachs Muppets. I mean, I love it. That's what they called their clients, Muppets. Because Goldman Sachs made them. Oh, they did. Oh, yeah. Look it up.
Are you serious?
I'm dead serious. It was leaked. They didn't do it in the press openly, but there was, yeah. Oh, yes. Look it up, Muppets. It happened a while ago during this whole period of time. But Goldman Sachs would make $1 trillion. Their clients would lose $1 trillion. And in all of this scandal, okay, but at any rate, so that was leaked to the public. And once that was leaked, well, then the Bank of England came out and said, well, we have to create a new benchmark. We can't use this anymore. So they've actually been working on this since 2012. And a number of global central banks like the Bank of Japan, the Federal Reserve, the Bank of England, the Bank of Switzerland, and I think there's one more, that worked on developing a new benchmark to convert all of these quadrillions of dollars worth of contracts from this old benchmark into this new benchmark. Here's the problem. It wasn't getting adopted. They weren't getting adopted. So in other words, new contracts were still being written with LIBOR in there. Now, they do have language in those new contracts that enable them to shift from one benchmark to another. You and I, in our mortgages, credit cards, whatever, we have no options about that. But so those can all shift. But this is supposed to be a market rate. But if you read the fine print, they eliminate this bond, they eliminate that bond, they eliminate the other bond. So it's not really a market. It's not a completely accurate market rate. And it does not match LIBOR. So the interest rate, it always runs lower. So if LIBOR is up here, SOFR in this country, in the US, it's SOFR. SOFR is down here. There's a difference. Now, I've had some people say to me, oh, well, it's not that much of a difference. And it's not. It could be just a few pennies. However, when you put that in the trillions and quadrillions of dollars, now it becomes huge and a tectonic shift. Because when this finalizes, or as they've been doing it, the value of the payments goes down, right? So if I were supposed to pay $100 and to the lender, right? It was based on LIBOR up here, and now it's based on SOFR. So those payments are lower. And the value of the contract is different.
Yeah.
That's what the big, huge deal is. Because if you have a bank stock, for example, or bank that is valued at X dollars,
yep,
and that changes on a dime, what do you think that does to the financial system?
Puts it under pressure and puts brings valuations down. But my question is,
yes,
first of all, two questions: why they're doing it, and you said it wasn't adopted before. If people don't do as they're told, so to speak, can't they just kick the can down the road and go, well, June 30th, we'll make it June 30th, 2024, 2025, 2026?
Right. So the first reason why they're doing it is because it was leaked to the public. I mean, they created that benchmark in the 80s. So it made it from the 80s until 2012 as a stated rate, and everybody was okay with it because nobody really understood it.
Yeah.
Once it was discovered that it was just a stated rate, not a market rate, now they had to change that. So that's why they're doing it. Second of all, can they kick the can down the road? Well, they've been kicking the can down the road. In fact, this shift was supposed to happen in 2021. But they made this, and I don't think any of these dates are coincidental, but in October 2019, they ran a test with $80 trillion worth of derivative contracts.
Okay.
And right when they made that test, everything went dead silent. I mean, I could find nothing about the result of those tests for about 3 weeks. And then all of a sudden, they postponed it until 2023. Now, when you ask me, can't they kick the can down the road again? Well, I suppose they're making up the rules as they go along. So frankly, I suppose they can do anything that they want. However, because they could not get adoption of the new rates, they forced adoption. As of January 1st of 2022, no new contracts could be written with LIBOR in there. They had to carry the new rate. So, and, I'm thinking if they're kicking the can down the road, we now have roughly 6 months, and they would have kicked it down a little bit earlier.
Yeah.
Okay. Right. So I think this is it. But I could be wrong.
This is it, but I want to know, our beautiful audience out there, why should they care?
Because it is tectonic. This is a global financial earthquake.
Okay.
If you are in an earthquake, you need to be someplace safe. If you are not someplace safe, you could die. And I'm being that serious because that's what this is. The value of every single contract. What was JP Morgan that said only gold is money, everything else is a contract or something like that. I'm not exactly.
Everything else is credit, I think they said.
Yeah. Thank you. Yes, that's exactly what he said. Exactly. Yeah. Everything else is credit. Yeah. Well, when you have credit, you're tied to interest rates, aren't you?
Good point. Yeah, of course. Yeah, credit is tied to interest rates.
So everybody needs to care because we got a little snicker snack of what's coming up in March and April and after that of 2020 with the pandemic.
Yeah.
And I wonder if that was not just a test to see how far they could push people.
I suspect that you're closer to the truth there than many people would even begin to understand or believe, to be honest. But yeah.
They knew that they knew about that for a long time. And they, in fact, we don't need to get into that.
Yeah, exactly. So we better not go down that road because I don't want to get banned.
Let's not.
let's not get shadow
let's not
banned.
go down that. Let's not talk about that. Right.
You just raised a gold coin, and you mentioned JP Morgan saying, gold is money, everything else is credit. So are you suggesting that if our audience out there have got cash in the bank or real estate or any other assets, that they're going to be worth less after June 30th, and that they need to be diversified or at least have some exposure to gold? Is that what you're saying?
That is what I'm saying. And I'm also saying that the value of the global currency, look, the whole world has been experiencing this inflation.
Absolutely.
Right?
Yep.
I mean, I don't really see any central banks stepping up and owning their part in it. Thank you ever so much. Right? Because all of the inflation.
Oh, Lynette, I want one of them.
Yes, you can get them. They're not very expensive either. I love my guns. I play central bank.
That is fantastic. Can you refill? Anyway, I love that.
I have two because I usually do run out of one. I actually have more than two, but I always keep two on my desk. And lovely Edgar keeps them filled for me. Poor guy, he's got to refill them every day.
I love it. And look, sorry, that was just absolute a cracker.
But think about this.
Yeah.
Because when the central banks do that, and that's what we've been experiencing since 2008, right?
Yep.
So when they do that, the purchasing power value of the currency that's already out there goes down. And so where they had all of the inflation held in the stock market, the bond market, the real estate market, the markets that they specifically targeted for reflation, that inflation is now coming out to the broader public. And if they can keep that inflation at 2%, hey, they get what they want. They get, do you know what the definition, according to central banks, is of price stability?
No.
It's a very interesting definition. It's not that the price stays the same, like that's what you would think when you hear that. Oh, all right, they're working for price stability as a key mandate. No, it's that inflation erodes your purchasing power slowly enough that you do not change your choices. You don't notice it. You don't ask for more money when you go to a job, and you're willing to pay the more money because it's invisible to you. You pretty much don't even see it. So price stability for central bankers is where you and I do not change our financial behavior because of inflation. You have rapid inflation like the world has been experiencing. Well, look at this. Oh my God, wage price spiral. Oh my God, that's the worst thing in the world. They didn't have a problem when the CEOs that used to make 20 times what the average worker made now make 1,000, 5,000 times what the average worker make.
Yeah.
They don't have a problem with corporations. I mean, if you look at the profits of corporations from crisis to crisis, as they've been doing this kind of thing, those profits are through the roof. So let's see. Corporations aren't creating the inflation. Central banks are not creating the inflation. It's you, the worker, asking for more money that's creating this wage price spiral. We got to stop that. Bad people, bad. I mean, it's ridiculous.
That gap, Lynette, that gap between the haves and the have-nots, the corporations and the workers, is getting wider and wider. Middle class is being wiped out. As a result of that, do you see that there will be potentially a lot more social unrest as we go forward into 23? Because you mentioned volatility.
That's what I'm saying. We're watching, it's quite interesting because global protests were really escalating up until 2020. And then all of a sudden they got quashed. Thank you, Hong Kong and many others, but they are on the rise again. And so it's not really a stretch to think that 2023 could definitely be the year that ushers in the obvious World War III.
What do you suggest people should be doing apart from waking up, taking a bit of notice and understanding that this move by the central banks to go from LIBOR to SOFR as it is in the US? I'm going to look it up what it is in Australia because it's never talked about. It's always suddenly
they don't talk about it.
So,
yeah.
Say again?
I said, why don't they ever talk about it? Why aren't they talking about this? This is a big experiment. It has never, ever, 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 ever been done historically. Never. And they certainly have so much handle on everything so great. Yeah. Well, why is the global economy in such a mess? So why aren't they talking about it? Because they don't want you to know about it.
Until it's too late.
Yeah. Tell you can't do anything about it.
Is this what's meant by the global reset, which has been touted for such a long time? Is that what they mean? Is that the crux of it, this LIBOR to SOFR?
Oh, it's the LIBOR, the SOFR, but it's really, there is officially, now I'll bet you've got the data on this as well in Australia, but if you look at the data, there's virtually no purchasing power left in the fiat money, in any of the currencies,
Wow.
right? So officially, in the US, you can go to the Fed, and so anybody can go on there and see, because everybody's looks the same, okay? Or extraordinarily similar. So if you go into the FRED, the Fred, which is the Federal Reserve Education Department, and in that little search bar, you put in purchasing power of the consumer dollar, purchasing power of the consumer dollar. What you're going to see is that officially we have roughly 3 cents left out of that original dollar's worth of purchasing power.
Yeah.
So there's no purchasing power left. They have to attack principal, which is what the negative interest rate experiment was about. And it didn't generate any more stimulation of the economy than just dropping the interest rates to zero. So the problem is they're out of tools. There's no more purchasing power to inflate away, and they're having trouble. I know globally they're trying to raise interest rates right now. That's so they can lower them again.
Wow.
So they're out of tools. So we're at the end of this currency life cycle. Okay. And the rapid inflation that the world is experiencing, I mean, how many times do you see that reference back to 1980, 1982, 1971, 1933, blah, 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 right? Well, what was happening during those periods of time is that we were transitioning. We shifted from one monetary regime to a new monetary regime. That's what was happening. And so even though they reference to it, I just found an article, and I actually used it today. It was the Financial Times. Actually, not only did they say the last time they saw central banks buying this much gold was 1967, but they also referenced the fact that it was a monetary regime shift. That's the first newspaper article that I have read that they actually made that point. Because they'll tell you that, but they don't want you to understand that we are completely changing. And of course, this next piece, the digital, right? So we had a gold standard, then we had a paper standard. Now they want to take us to a digital standard. And then that digital standard, what they're actually doing is redefining money.
Absolutely. Yep.
Officially, they're because money is supposed to have this is the way it was sold to us. This is the way it was on the gold standard. Had 4 components. It was a tool of measure, a tool of barter, a short-term store of value, so you're fairly paid for your labor, and a long-term store of value so that no matter when you use that money, you are always fairly paid for your labor. Well, they took the third one out. I don't know when they changed this, but I was doing a piece back in October. And so I was doing some research on it. And I'm like, wait, When did they only make 3 pillars of money? I mean, it's more honest because inflation has robbed you of all that purchasing power, but I can't tell you because they scrubbed all their documentation, which I also thought was pretty interesting. Yeah, really. And I dug.
And I know that you like to dig a bit. Again, going into central bank digital currencies, which appears like it's going to be coming sooner rather than later, quite frankly. But again, people aren't watching, people don't realize. But I've been watching the central banks and they've been buying a lot more gold. My question is, if they're going to switch off to a digital currency, why do they care about buying so much gold?
Oh, wow. That's a great question. And that is because what gold has done for 6,000 years is hold your purchasing power value intact over time. That is the single most important function that it performs. And the reason why it does that is because it is the asset. Well, gold, physical gold and silver are monetary assets that have the broadest base of functionality and the broadest base of buyer. In other words, both gold and silver are used in every single sector of the global economy. So manufacturing, financial, art, food, medical, space, electronics, on and on and on and on and on. It's used everywhere, which means you have the broadest base of demand because you've got a whole bunch of industries that use physical gold and silver. So that's why it's never gone to zero.
Yeah.
Now, tell me tell me any other asset or any other asset class that can be used in every single sector.
But again, Lynette, why do they care if they're going to put everybody onto a digital currency? Doesn't gold and silver become irrelevant because money is just an exchange mechanism, if you like. So if everybody's got a wallet and I've got my digital currency in that, and by the way, for the younger generation, much younger than me, that they're all about this, aren't they? Tap and go, tap, 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 tap.
Yeah, good training, huh?
Really
because
good.
In order to make the transition, you got to keep things as close to what people are used to as possible. And the reason why gold and silver is because they want to stay in power and in control. And if you don't have this to hold your purchasing power, what do you got? They can go in and they can just take you to negative rates. There's no value in this $100 bill.
No.
I mean, I'm old enough to remember $1,000 bills, $500 bills, $5,000 bills. One time I was about maybe 15 or 16, so this would have been in the 60s. My father was a developer, and I remember somebody came to our house to give him $12,000 in cash, and they were all in $1,000 bills.
Wow.
And I was the only one home, and I had just gotten out of the shower, so I wasn't even dressed yet. There was no way I was putting that cash down and doing anything with it. I was scared to death. I remember I sat on the family room sofa holding this $12,000, $12,000 bills, and I couldn't wait to give it to him when he got home. So,
and now we look at $12,000 and go, that's not a lot.
Well, yeah, today, true. But if you think about it, fiat money is government declared money. This is legal tender. You have to use it.
Yeah.
But if they can declare this money in even digital form, can they not declare it not money anymore?
It's interesting, Lynette, here in Australia, post the chaos, I don't want to use the P or the C word, if you know what I mean. A lot of places down here, because of course, at one point they said, cash, dangerous, very dangerous. And so even now, because I use cash, and listen, ladies and gentlemen, you all know what I'm like, but I go, cash is really important because if you stop using it, they'll say there's no point in having it anymore. And I guess my question is, down here in Australia, they've turned around and said, we don't accept cash anymore. Don't accept cash. It's like slowly pushing you over into this digital. When do you think that's going to happen?
Well, it's, as you pointed out, Carrie, it's already happening. And, and this is really by design, because there was a piece that the IMF put out and anybody can access it. It's called Breaking Below the Lower Zero Bound. And it came out, I'm pretty sure, in 2015, where they actually showed you how they could eliminate cash. And what they stated in there, and this is their policy anyway, is they want enough distance between their policy and you as possible, so that you don't know that this is their policy. So in that document, they say that we want the retailers to introduce this. Now, what they talked about in that paper was, and so this lies in our future, I'm sure they're going to do this, is if you walk into a coffee shop, right, for example, and a cup of coffee is $5. Okay, if you use cash, it's going to cost you $6.
Oh, wow.
If you use credit or debit, it'll cost you $5. So what will most people do?
Absolutely use the,
Exactly. So that's how they get you to volunteer. But when they had the C word come out, right? So they pushed it through, and we do vote with our purses. So I can tell you that if a store refuses to take cash, I do not shop there.
I'm exactly the same, Lynette. I walk away.
Yep, exactly.
Except recently I was at a particular place here in Sydney with a whole bunch of friends, and it was a bar. Now, bit tough when you're having dinner and you go up to buy the bottle of wine, they say we don't take cash. That was really annoying, but, sometimes there are no choices. But look, let's bring it all back, if we could, to why should people have exposure to gold? Now, I know you said there is no counterparty credit risk with gold and silver, but a lot of people will say, yeah, but I'm so used to just doing the tap and go, and if I've got a digital currency, it's easy. Where is the danger, and why should they be in gold?
It's very easy. You just pointed it out. It's easy. It's easy to take it. It's easy to say. I mean, look at what happened in Canada. We talk about China, and Australia, of course, is very close to China. And so you can see all of the controls that the government has, because they are essentially, I think they are pretty much cashless. And that is a true surveillance economy. But we even saw it in Canada when the truckers were protesting, a legal protest, and the government, boom, shut all of their accounts down. So if that's what you're depending on and you're okay with that, I mean, that's your choice. I can't tell you. But for me, I want to hold my purchasing power. I don't want them to have that control. And I can easily convert this into whatever the currency is. Actually, anywhere in the world, I can take this, stick it in my pocket, go anywhere, and convert it into the local currency so that I can barter with it. But this ensures.
But what if there is no currency anymore? Everything's gone onto a digital currency.
That's a currency.
How can I swap my physical gold for a digital currency? Won't there be a way that they go, no, we don't accept gold within this online platform?
Well, I suppose that anything is possible, but history shows, remember, I've got the broadest base of demand. So the way that I convert it is I simply sell it.
Right.
And then when they make payment to me, it's in that new currency. They're not giving me change for my gold. They're just converting it. I sell it, and that money goes into my account because I don't have a choice. I can't pick up a check, or if I picked up a check, I had to deposit it into the account anyway. But no, there would be no checks. Everything, full surveillance economy means they know what comes in, they know what goes out, they know where you spend it, they know how you spend it. They can dictate how long that currency is even viable. right? They can say, okay, you got to, and we saw this with the tests, right? You have to spend it. This is where you can spend it. And if you don't spend it by this date, it goes away.
Poof, gone.
Poof, exactly. So you should be buying gold and holding gold for the same exact reason that central bankers are, so that you can stay in control
Right.
of
That's
your
a
future.
really
I mean,
good
that's
point.
why.
It's like be your own central bank, isn't it?
Voila.
Yeah.
Exactly like being your own central bank.
What do you say to people out there that would say, yes, well, but Lynette, the goal of gold, I like investing in stocks and shares or real estate because I see the value going up, and, gold in their view doesn't go anywhere. And if I've got physical gold, it's going to cost me to hold it. Why would I do that when, if I'm out of the stock market, which has been going crazy, and real estate, which has been going crazy, all these wonderful things, why bother with gold? I think that's a view a lot of people have.
Absolutely. And, understanding that that's exactly the view that they want you to have, because what happens, it's called nominal confusion. Inflation causes nominal confusion. In the US in 1971, the average income was roughly $9,500, and a family of four could live on that.
Wow.
Today, I think the last thing I saw, the average wage is $67,000. Now, you go, well, I would much rather have $67,000 than $9,500, but with $67,000, you have to have two wage earners, and you're paycheck to paycheck.
Yeah.
Why? Because of inflation.
Yeah.
Right? So, yes, exactly. They know that. People get all caught up in the numbers, but the real trend, the trend that we need to be paying attention to, because that's the one that really impacts us, it's not how many dollars you have, it's what you can convert them into.
Yeah.
In Zimbabwe, you can be a billionaire and not be able to afford 3 eggs.
Wow, yeah. Good, very good point.
So if what you have can only be converted into garbage, then the real trend is in the purchasing power, which over 4,800 times, so historically, has gone to zero. Look, I have all of these bills. I have a $10 million Zimbabwe note, a $200,000 Vietnam dong. I don't know what the number is on that. Oh, 250 Iraqi dinars, on and on and on. Heck, here's a $1 gold certificate, right?
Oh,
wow. Here is a Confederate $10 bill. None of these can I take to the store and buy a cup of coffee with.
That's a really good point, Lynette, because I did a lot of travel over the years, I had all of this paper sitting in my wallet. I went, oh, this was just pre-pandemic, I think, use that P word. And I went to an exchange place and I said, hi, here's all this. And it was quite a lot. And the girl looked at it all and she basically handed everything back except for the UK pound and the US dollar. And she said, everything else is worthless. Can't do anything with it.
Oh my God. See?
Yeah.
So that's why, because no government has to say this is money. It's been money for 6,000 years. And just looking at central banks accumulating as much of this as they can get their hands on should tell you it's still money.
And it's time, ladies and gentlemen. All right, Lynette, we are running out of time. I would love you to give your final views as we come into 2023 of what you feel our beautiful audience out there should, first of all, what to, I guess, pay attention to and how they can protect their wealth.
Well, I'm not going to say that it's easy to pay attention to that transition that we were talking about, even though that to me is the big key thing that's going to happen this year. But you want to pay attention to the civil unrest growing and growing and growing. I don't know for sure, but I feel I'd say 98.7% sure that there will be a major crisis in the first half of this year, because it's got to distract you from what's going on. So know that that's part of the evolution to make this transition. And, you know, it's food, water, energy security, barterability, wealth preservation, community, and shelter. These are the things, if you have any medical issues, stock up, right? Make sure that you have what you need. You remember what happened in 2020, the grocery store shelves, all of that. You know, what did you hear yourself say, I wish I had, or I wish I had done? Do that. Do it now. And definitely, you've got to get physical gold, physical silver in your possession. Understand that in any form at all, it is monetary at its base. But this is what's going to protect the current wealth that you've managed to accumulate. And you like those those price numbers? Okay, this is a truly diversified portfolio. You don't have this, you just all have digital and paper, not diversified.
Yeah,
so
good
get
point.
Get your portfolio diversified with real money, and just get yourself as prepared in all of those areas as you can, and do it as quickly as you can. Do it as quick, because I can't tell you the exact moment, but I know that I sleep better at night because I'm prepared and I have my food, water, energy secure. I have all of it. And I've been working on it for a long time. So get it done.
Well, Lynette, as always, it's fantastic to have a chat with you because you have such a wealth of information. And look, ladies and gentlemen, she's not scaremongering you. She's just stating some facts here, like the LIBOR to the SOFR, like paying attention to central banks and what they're doing. And as we said earlier, central banks are buying the largest amounts of gold that I think that they've ever bought. And what Lynette's saying is, you know what? They ain't stupid. They're making sure that they're protected as well. And our passion, Lynette's and mine, is to make sure that you are well prepared for the potential of a coming storm, I guess, and a potential reset. So make sure that you watch this more than once. Take everything in that Lynette said, and let's make sure that 2023 is a year that you are not living dangerously, but living well. Lynette Zang, ITM Trading, thank you so much for joining me today. It's been great to see you. We'll have you back again soon.
Yes, let's not make it a year.
Okay. Take care.
Happy New Year, everybody. I know this was awful, but you know.
It's okay. If they're prepared, it will be a happy new year.
Absolutely. The opportunities, you know, it isn't all doom and gloom. There are lots of opportunities that present. And if you have wealth, if you have your purchasing power, you can take advantage of them. It's how wealth transfers.
Wealth transfer. There we go. Thanks very much, Lynette.